gets that.
Hey, what's good, everybody? Happy Wednesday. Yeah, Wednesday already. I hope you're having a good day so far. The markets had sort of a back and forth wild day. We'll get to that in just a second. Remember, tomorrow, if you go up here, webinar.jazzwealth.com. If you want to come join us for the webinar, it'll be short. We'll keep it really quick and simple for you. We're going to talk about the difference that $1 makes in retirement, or $5, $10, $20. Going to go through the whole thing real simple for all of you that have been looking for, what if I put X number of dollars away, and then when I get to retirement 10, 20, 30, 40 years from now, how much does that work out to be? We're going to put that in the webinar. So join us at webinar.jazzwealth.com. Completely free. We'll make it really quick and hopefully share something with you you didn't know already. Also a reminder, if you're a client of us here at Jazz Wealth, remember to check your contributions. Going back to 2017, if there's anything in 2018 that you want to push back to 2017, just let me know. Not such a big deal. I'll take a look for you if you don't know the answer to that question. But we are running out of time. You've only got about, 2 weeks left to go, 2.5 weeks to go before we move into 2018. So make sure you mark all those contributions for 2017. Okay, let's get started. We'll go into the market today. Here, let's see. We need a chart. Here is the chart of the S&P 500. So the S&P 500 today, right on the 200-day moving average. That is the red line that you see on the screen going all the way down here. That is the 200-day moving average. It is all that anybody is interested in when it comes to the S&P futures, the S&P ETFs, the S&P in any way you want to look at it, right smack on the 200-day moving average. That is a very, very important spot. I believe the Dow, the Dow is also right on top of it as well. The Nasdaq today sold off even closer to it. When that does finally break, if that's what's going to happen, watch. It'll be all over the media. That will be the focus point for everybody. You can see today, by the way, if we go back to just the S&P 500, you can see why the market stopped right there, right? Right here at these lows or whatever. Every blip, by the way, is one day. So today's day is just a back and forth day. But you can see everyone wants it to hold above the 200-day moving average. That's why it is stuck at this price right now. So we have people that are concerned it's not going to bounce. We have other people that are saying it's going to bounce. And so that's why you see that tug of war today. And actually the Dow, the S&P, what was it? The Dow swung back and forth today between 1% and 0, or negative 1% and 0, more times than it's ever done since 2009, sorry. So a wild day for the markets overall. We'll get to some of the stocks here in just a second. The Dow was down by 9 by the end of the day. The S&P only lost 7, and the Nasdaq was off by 59. Where's the reason for that? You just couldn't get anything going in the banks today. The banking stocks were all pretty much flat. They did bounce around back and forth with very little in excitement. The semiconductors were very weak. Anything tech related is just pulling back like crazy right now. So people moving out of anything growth and moving into everything value. Anything they can find value versus growth seems to be where the money is sloshing around. So that's that. As far as I put that on the screen there wrong. We're going to go to your retirement investments first. I'll continue to point out tech. Tech is going to be the weak spot of your retirement investments if you're exposed to that in your portfolio with us. If we go to energy, that had an off day also. That's just going to be crude oil down about 1%. And some of the energy stocks, if you follow the sector, they just had a rough day. Nothing too crazy overall. You could see energy itself really hasn't done anything good or bad, just kind of back and forth. Today was one of those back days. On the good side, the outperformer was going to be real estate investment trusts. Bond-related products had a pretty decent day today. So real estate investment trusts up 2.5% on the day. So continuing to bounce off of those lows, looking very good. Let's go to a couple things in the news and then we'll wrap it up. We've got Amazon in the news. You're going to see the headlines there. Basically, Donald Trump doesn't have enough to do in the White House, apparently. He's picking on Amazon. Actually, Congress is going to be voting on tax rules for internet companies. Right now, these internet companies are lobbying like you wouldn't believe to try to hang on to some of their tax benefits. The president said that the tax treatment is unfair for Amazon compared to the brick and mortar sort of, everyday Main Street stores. He wants to fix this. Congress is already working on it. Shares were lower today by 4.5%. It was worse at one moment. Look at how much that affects the net worth of Jeff Bezos, by the way, if you want to have some fun with that. Let's go over to Tesla. I want to make a point of Tesla today. It was down 8%. Their credit rating went from a B3 to a from a B2 to a B3. The credit agency Moody's, which is one of the big ones there, they said that due to liquidity pressures and its large negative free cash flow and pending maturities of convertible bonds, they have lowered their credit rating to B3. B3, by the way, if you're paying attention or you're interested in credit scores, is not good. It is bad. It is one step above absolute junk. So Tesla not looking good. Now think about it this way. If you're investing in Tesla, and right now are some of the best of times, and Tesla has to borrow more money, they're struggling to pay on some of their extra money, and this is the best the economy's ever been or has been, what's it going to be like when things get bad? So really, really take into consideration, if you're a Tesla investor, they're not paying their bills to a point where they can prove that they can pay their bills. They just keep borrowing more and more money. That's a bit of a problem. Actually, the B3 credit rating, did I pull it up? It's considered highly speculative and almost non-investment grade. So that gives you an idea of how strong or how negative of a credit rating these guys currently have. So something to keep in mind there. Let's talk about something good here. Lululemon. LULU is the symbol. Broke out some new highs today. Almost a 10% gain on the day. Earnings well beyond expectations. They did a great job there. They said going forward, more great things to happen there. They're really, really excited. And finally, Restoration Hardware. These guys, in my opinion, are marketing geniuses. This company, if you've ever been there, first of all, the building's beautiful. I want to buy the building and use it as a house. But the building's beautiful. They spend so much money. When you go in, you feel like the stuff is worth more. It's the same stuff that you could buy at any other furniture store, but it's so much more expensive. Well, apparently most of the retail public is falling for it. They announced earnings that were well beyond what Wall Street has expected, revenue well beyond what people have expected. They said that they're doing great. So the stock was up 22.5% today. Part of that was a lot of people like to short this stock. A lot of people look at this and say these guys charge astronomical prices for furniture that doesn't need to cost that much, and eventually people are going to figure it out. So a lot of people short. Almost half of all participants in this stock are short, and that just means that they take the position that the stock will go down rather than up. So they make a profit if the stock goes down. Well, today with the stock shooting up, a lot of them were probably forced to close their positions out, which could have also been a part of that as well. So that's Restoration Hardware. I would love to buy some of the stuff. There is not a chance in you-know-what that I'm even going to go in there and spend $2,400 on a chair. There's a chair in my office, looks just like the one that was at Restoration Hardware. It was $3,300 at Restoration Hardware. Got mine for $120, rooms to go. It's the same chair, I promise you. Line for line, it's the same chair. So, not happening. I'm not shopping there. Anyways, that's all I have for you today. Let me see if there's any questions. Watching yesterday's video, great job. Oh, thanks, Prince. I appreciate that. Henry says, hey, if I've maxed out my Roth IRA, what percentage of my paycheck should I invest in my Works 401k if they only match 3%? Henry, that is going to be 3%, right? You only put in your 401k what the company will match for you. I feel very strongly about that. If there's some other type of investing that you want to do or more money you want to invest outside of that, there are by far more better choices. Yes, financial investor backing me up there. I like it. Perfect. Thank you. Thank you very much. All right. You're welcome, Henry. That's all I have for you guys that are watching live. I'm going to wrap it up for those that are watching later. If you have any questions, jazzwealth.com. If you want to chat with Jazz at jazzwealth.com. Enjoy the rest of your day. Tomorrow is the webinar, so I will still be doing the after market wrap. But then we'll be doing the webinar shortly after. Choose a time, 7 p.m. or 9 p.m., whatever one you want to go to. I'm happy to do it. We're going to do the same one, just do it 2 times. And we'll talk to you guys then. Thanks.